Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day recap for Friday the 13th. Friday the 13th. Let me just get the video going because I forgot to put that on. There we go. Uh, a lackluster way to end the week. A little bit expected, I would say, with all the geopolitical concerns and risks going on out there. By the way, I hope everybody has a safe weekend and so forth. And it's a crazy world right now, and the market's kind of reflecting that. I will say this, and I'll kind of start the video off and maybe more of a positive way, because there wasn't a lot of positive developments as we closed out the week. I would say this with geopolitical issues, right? I think that's the best way to phrase it right now. They're usually pretty temporary in the market. There are, what I said in the beginning of the week, there's some knee-jerk reactions, right? There is a lack of risk taking while it's going on, but you kind of have to think about, what companies and, what areas of the market are really unaffected by what's going on. Because when this happens, when there's a lot of fear on the tape, the VIX was up, 15, 16% today, right? Everything gets hit. And, you can find opportunity in that. The question is, of course, how long the geopolitical conflicts last, right? Usually, but, at the end of there is, light at the end of the tunnel in terms of it usually makes for some good buying opportunities. But the main thing is to understand that no one has a crystal ball and no one knows how long these things are going to last. Fridays are tough when you have things like this go on, because when the weekends, because there's always a level of uncertainty over when there's a weekend. But when you have things like what's going on right now in Gaza, there's another layer or another degree of uncertainty, and people don't really want to be owning a lot of risky assets when things like this are going on. So that's a little bit about, if you look at the price action today, which again was not good. You saw some bounces in some of these things that have gotten really hit. Like the medical devices were one of your best performing groups, or actually the best performing group from the open today was medical devices. So they bounced. They've been really getting clobbered along with snack companies, right? And anything related to what Eli Lilly and Novo Nordisk have with their drugs. I mean, that's been a whole crazy scene. I haven't really devoted that much time to it, but it's just, there's been a lot of things that if you can manage to kind of dodge or not be a part of, because there's been a lot of areas that have been going down and getting hit pretty hard. All right, let's talk about, so first of all, I don't think I mentioned the disclaimer, but risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Performance. So let's begin to kind of go through, now that we're at the end of the week, what I usually do is go over the weekly performance, and I will do that in just a second. But the themes of the day, VIX up 16%. Gold flew up today, up 3%. Again, that's based on just the environment right now. And bonds, which, I spent a lot of time in yesterday's video talking about bonds, they were up 1.8%. So, if you're following, and I talk about some of these relationships can be a big thing until something else goes on, right? So I mean, you can't always bank on, okay, well, yesterday the market didn't like that yields went higher and equities really sold off, especially after that 1 p.m. bond auction yesterday. So today you could be thinking, hey, well, bonds rallied today. How come equities didn't? Well, there's other things going on. And we always say too, all things being equal. Well, all things were not equal, right? We've got a mess going on, all over the place. So yes, that's nice to see bonds climb back we can maybe I'm going to start with yeah, I'll get the bonds out of the way. Again, bonds are not my favorite thing to talk about because the macro stuff is not my favorite thing to talk about, but you have to be aware when we're in a very macro tape. So we had that big bearish engulfing candle yesterday in bonds. So we bounce. I mean, we are off the lows here, right? And I've been talking about how we took out a lot of downside levels, and we're trying to hold on to them. Are we above any major technical? Have we won anything back here? Technically, no. We're still on a downtrend. We've just bounced in a downtrend. So you do have to be aware of that. It would be great if we can hold in here. But you have there's a lot of people making different predictions about bond prices. I don't really make predictions because there's no way, I can predict what level yield you're going to get to. So, people like to hear predictions. People like when, the CEO Jamie Dimon comes out and he says the yields are going to go to X, right? I mean, he doesn't know either. I mean, he's a smart guy, but he doesn't have a crystal ball either. He doesn't know if yields are going to go to 7%. Maybe that's just his feeling in his gut. But for now, like, I know that the trend is down. I know that we've taken out a big technical level, and we'll see if we can get a bigger bounce. Reminder, like the last time that we were here, we kind of did this back and forth a little bit too, right? We had kind of an inside candle here, another one, and then it took a couple weeks for this to happen. So, this could be the start of a bounce, but you just don't have any like technical confirmation that something bigger is going on yet, right? Other than that, the version point of control is a big thing, but it really depends on demand and supply. Right. I think that if there isn't any more, really huge selling, perhaps this can bounce further. All right. So that's the weekly bar there. We'll start with the S&P on the weekly chart. Man, that's an ugly looking candle, isn't it? For S&P futures, did finish positive for the week. Right, I can show you this here. Up 1.7%, but nowhere near the highs. And right now, what you have to be aware of is we closed back below the value area, and it's another lower high for now. Now, things can change. We need more time to basically see if we have some confirmation that we're not going to go back and make another lower low, right? Because we're in this pattern since we made a high back at the end of July, right? We've been making there's a pattern here, right? Here's a low, right? Here's the high. The next high was lower. And so far, then, the next high that we just made this week is lower as well. And that's the same thing on the downside. There's been a series of new lows in here over the last couple months. And we don't know if we're going to go back there. I mean, I don't think that we're going to. I think that we're going to maybe digest in here, considering that we are in a better seasonal time period of the year. But we'll see. And it's going to depend on some of these earnings reports. I mean, we've gotten some earnings reports out so far that have not been too bad. But none of them are the big components of the indices. So it's kind of to be continued. Let's talk a little bit about one thing I would say as well that I didn't really like today, was that we took out yesterday's lows, right? We had a nice bounce at the end of the day yesterday, further in the overnight market, and then not so much again, today. Now we did take out, I think there's that another, it's just a 5-minute VPOC being taken out, but it just disappeared on me. But regardless, there's not a lot to kind of hang your hat on, over the weekend. And again, that's symbolic of just what we have going on, geopolitically. So the Qs, which underperformed a little bit, but again, I think that they were leading. If we go to, let's do this correctly with the weekly chart now that we do have a weekly bar, but kind of same thing. You just don't have any confirmation of anything changing in this technical picture, right? You have a bounce from the lows of of the lows of September, October, but that's all you have right now. You don't have anything else technically, right? And I think even further, if you look at the daily chart, we're still inside the value area. The 80% rule, the bullish 80% rule is still in effect. But from a technical aspect, we hit that trend line. And the reason why I drew that trend line is because you kind of there's too much distance from the bottom of value to the top here, and it made sense to basically draw that. And and I think I drew that trend line a few days ago, saying that that's where we could possibly get to, and it's the same type of situation here. So yes, this is stronger than the S&P, but we're still in this pattern right now of making a lower high. So what will be important is, if we do some consolidation in here, right? And we did this in September, we consolidated, did another try here, and then really kind of spilled lower. So yes, we do have some support in here at 359.90 if we have a little bit further action to the downside. So there's some levels to watch to the downside, but yeah, it's a little bit disappointing to see this type of pattern. So again, we could be waiting for that second half of the month seasonality to kick in, because the October, if you do look at the S&P seasonality, it's strong. It really is stronger in the second half of the month. So that's another positive that you could possibly take away. And now close your eyes if you don't want to see a horror scene. But I'd say this IWM is really ugly looking. It's just ugly looking in the fact that it continues just to move sideways, and it's been hanging around like the lower, the lower side of the range. Notice how close that is to the lows of this month, right? I mean, it's basically right there. There's not a lot to really like in this chart. Even if you're bearish too, it's such a sideways looking chart, because if we go to the weekly chart, you're going to find that we're still inside the value area. So this is just super sideways for now. What else? Anything else that I really wanted to cover? I mean, it's the same story with sectors. I've talked a lot of this week about how XLC, which is the communications ETF, which has the bigger, it's got the bigger weight of Google and Meta in here. It's about 48% of the ETF. But also, look, this thing, this thing failed too, right? It had that one day where it got over the trend line, and you don't know if that's an oops yet, because it did get rejected there and is now sitting back into the value area. So, I would say with a lot of these charts that, and this one being one of the best sectors out there, maybe cyber is the other one that's been pretty good, but that has the same thing going on. No confirmation of really anything changing here in the short-term trend. The other one, IGV, which has been, software, same thing. We're in a lot of indecision right now with some of these areas of the market. And then we could look a little bit I didn't go through some of the commodities, but crude did make it into the value area. This was the main thing for me, that or one of the main things that I was watching. We had the bounce on Monday, but we only went right to the bottom of value, which is right here, 86, and then we moved down. Then we started to move down, and started to move away from where we were earlier in the week, but you got one heck of a move in there. So yes, you could be long some energy stocks here versus 86.34, but they're going to be driven on a lot of these headlines. There's a lot of headline risk with all of this stuff right now. Gold, what can you say? Some of these are really difficult for someone like me who's a trend trader, because I'm not playing the edges, right? I'm playing for the move in the middle, right? I'm not trying to time the bottoms or the tops, but really we just have a lot of reversion to the mean. A lot of people trade like that, and that's a good way, in my opinion, to trade when you have a very sideways market. just buying those edges. But you have to really kind of wait for the edge, to happen, like fading this. It's a fader's market, fading the rips and buying the dips a little bit. But it's tough because you got to be really quick with some of the stuff. You can't you can't let the paint dry, right? If you buy the dip in some of this, if you're waiting for like the turn, right, you only have so much distance, right, on each one of these turns. Now this is this got oversold here to the downside, and of course, rallying on geopolitical headlines, but that's what you have right now, and if you're doing that, if you're fading right now, then this is probably another move for you to fade. But I look forward, and you kind of just have to be patient if you're like me and are looking to trade trends, because a lot of this is just reversion to the mean trading right now. What else? So we talked about crude, we talked about we talked about crude, we talked about gold, and here's what XLE looks like. Why am I laughing? Because again, this is just really tough, right? If you bought this in here, you probably want to be a seller into here, right? There's just not a lot to kind of hang your hat on. Here's XOP, which closed right around this downward trend line too. So a lot of, what I'm really referring to here is just to have a lot of patience. There's OIH rallying right up to the bottom of value resistance. All right. So here's your performers for the week. So, sometimes this is just what the market does. And, the patience word comes to mind for some areas of the market where if you've rallied a little bit into resistance. But gold miners, that was your best performing area for the week, up 7. So if you went long some gold miners this week, congratulations, because those are up 7.7%. Energy stocks, aerospace, defense, those actually had a good day today. And I went back into a trade, this DRS, which if you're familiar with Formula One, you know what DRS is, but that's not what this stock is. It's a defense stock. And I mentioned that this was my favorite looking defense stock, because so many of the other defense stocks have overhead supply. Now, NOC made a really nice follow through move today. That's kind of my second favorite one. Another one that I do own is AVAV in a longer term account in the TTG trend portfolio, but this didn't close on the highs. And that's not exactly an encouraging looking candle, but it does get you back into that range. For whatever reason, there just seems to be a seller in this thing, because it had such a good earnings report, but it has done nothing really impressive since it reporting earnings. Another one too that is KTOS, but this is kind of a work in progress too, just an inside candle. GD, all of these things were up today. GD had a nice day, up 2.4%, and then the other one, LMT. LMT was not able to take out the highs from earlier in the week. Note that name reports earnings next week. All right, so aerospace and defense stocks were up 4%. Utilities turned in a good week. A lot of things that may not have been on the top of your list to start this week did really well. Utilities were up 3.6%, right? You look at the Qs, they were up 1.8%. But if you went long utilities, you're much more happier going long the utilities than the Qs, given the move throughout the whole week. Solar stocks managed to turn in a positive. This is kind of something interesting. I've been anything that's really underperforming, I'm negative about. But this will be a level to watch in the solar stocks, which have been really beaten up. I give people a hard time whenever they're quoting a solar name, because I'm like, why? At this point, it's been your worst performing area of the market, unless you're shorting. But I make fun of the people who talk about going long this name or that name. I'm like, what are you guys looking at? This is your worst performing group out there. Why? I get it. They will probably bounce at some point, but man, the trend is down. And that's why I'm bringing this up right now, is if you must take a shot at something that is an underperformer, watch that 46.31 level in the solar ETF. All right. And again, I don't pick on, it's not that I have anything against solar stocks. I have anything against anything that is showing relative underperformance. I stay away from anything that is in a downtrend and is showing relative underperformance. Areas that did not do well this week: blockchain stocks down 3.7%, biotech down 3.5, the banks, acting differently than, of course, some of the bigger names, right? They're more vulnerable. They were down 1.6%. That's not a great looking chart. I'll spare you that one for now. Steel stocks were down 1.5%. Some, like I said, some earnings reports were pretty good, some bad. CMC had a bad earnings report. That name got hit pretty hard. Robotic stocks, automation stocks, they underperformed. They were down 1.2%. Transports down 1.3. So again, some interesting areas, but I'll tell you, when I see people post charts on Twitter, right? And I love, people who do post charts on Twitter, right? The majority of charts that I always see posted are high growth, software names, cyber names, all in that super high growth area. But I'll tell you, right, and I do it too, right? I would rather play those names too. But look at the left side of what performed well this week. Those areas were not in, were not at all amongst your top performers. So it does, it's kind of where I'll probably leave the video for this weekend. You have to be a little bit more open-minded, I think, because those names, if they continue to underperform, right, and they've shown flashes, right, they've shown flashes of nice strength here and there, and I've tried to piggyback off of that too, but it could be something else that comes out of this market and decides to lead, right? And again, just looking at the left side here, just a lot more other areas did better this week than some of the real popular stocks. All right, guys, that is it for today's recap, as well as the weekly review. You can go to Tribeca Trade Group for a free look at what we do in terms of our intraday notes, end of day notes, so that you can get an idea of if Tribeca Trade Group is a value add for you, because I think it is. All right, guys, have a great weekend.